Hey, what's up, guys? So I posed a question on the gram today. Basically, I gave two people, person A, person B. Person A is a person that appears to be extremely successful, and in fact, he is pretty successful. He has a corporate job with a Fortune 500 company, making about $120,000 a year. Full benefits. He has a college degree plus a master's degree from the University of Georgia. He also drives a 5 Series 2019 BMW, brand new. He lives in a high-rise condo overlooking the city of Atlanta. He's living the dream. Then we have person B, who lives a little bit more modest, a little bit more low-key. He has his own IT consulting business in which he makes about 55 grand a year. On top of that, he does a little bit of ride share, sharing economy gigs like Uber, Lyft. He makes about another 8 to 10 a year doing that. And he doesn't have a college degree. However, he does have a couple of specialized skills. He has a real estate license, and he also has he's also certified as a armed security guard, so he can do those two things to make money as well. And in terms of his lifestyle, he lives in a house out in the suburbs, nothing flashy, nothing fancy, no upgrades, just very simple and modest. And he has a 2014 Honda Accord. It's fully loaded, but it's paid off. He doesn't have a car payment on it. And then in terms of assets, both guys have about $20,000 in savings. Our guy, person A, who's living the life, he has about $25,000 in his company 401k retirement account. And then our guy, person B, the more modest guy, he has about $20,000 in a self-directed stock market account. So, when I pose the question, which person would you rather be at age 30? Most people, from the start would automatically say person A because he has nicer things. He has a better car, he lives in a nicer place, he has more education, he makes more money. He seems like the obvious choice. And then we have person B, which most people wouldn't choose on the surface, but you gotta really look into it, so let's break it down. So person A, his car payment is about $900 a month. We're estimating that for that BMW. Person B, he doesn't have a car payment. It's actually paid off. He just has insurance, which comes out to about $160 per month. And we have person A, back with the BMW, his insurance is gonna be a little higher. We're gonna estimate it at $250. Then back to the condo. So we're gonna say he lives high rise, again, overlooking the city, $3,000 a month for his mortgage. $350 easy per month for an HOA fee. Person B, $1,500 per month for a mortgage. Remember, he lives a little bit further out from the city, out in the suburbs. Things are cheaper. It's nothing fancy about where he lives. So he doesn't have an HOA fee because he doesn't have the amenities that person A has. Person A also has the master's degree from the University of Georgia, in which he has about, we'll call it 50K in student loans. And that's, we'll include undergrad and graduate school, which, I'm probably being a little nice here, so we'll estimate that at $750 a month. So as you can see, person A's expenses are adding up pretty quick. Person B, on the other hand, doesn't have any educational debt because to get a real estate license, it probably costs you about $400 or $500. Same thing to get certified as an armed security guard. So he may have paid $1,000, in which he paid cash for, didn't have to take out any debt. And then in terms of their assets, both of them are saving money at a decent rate. Our guy over here is taking control. He's buying his own stocks. He's picking his own things. Our guy over here is just leaving it to someone else to make the right decisions for him. So at the end of the day, I wanted to see what you guys thought, but my personal opinion, I'd rather be person B at age 30. He has a lot less debt, a lot less pressure to make money, because person A, if he was to lose his job, he's got a big overhead to cover. And if he can't find nothing pretty quick, that $20,000 in savings is gonna go pretty quick. Our guy, on the other hand, person B, he doesn't have a lot of debt. And he has specialized skills. He's not afraid to get out and drive Uber. He's certified as an armed security guard. So if he loses his job, he can do things in which he's comfortable with, to maintain the same lifestyle that he has. Person A may have to take a drastic step back in his lifestyle if things were to go wrong. So that's just my opinion, and I just don't like having a lot of debt. You know, I prefer to have the freedom of person B opposed to person A. The pressure is always on to make money because he has these obligations. So I just wanted to see what you guys thought, and also share, you know, where I was at, and I'll catch you guys in the next video.